Do you want to invest, but don't know where to start? Are you scared when you hear about the stock market? You think you'll lose all your money if you make a mistake. But the good news is there is an investment for you that is low risk, low cost, and once you understand it, you'll say, it was so easy. Today we will know. What is an index fund? How does it work? Why is it the first choice of smart investors? And at what age is it most profitable to start? No, brother, this is not a new MLM. No one here tells you take 10 people, then 100 will come. 1. What is an index fund? Let's say you want to own the best 50 or 500 companies in the market, but you can't buy all the stocks individually. Index fund is a type of mutual fund that follows a specific index. For example, S&P 500 Index Fund follows the top 500 companies in the USA. Nifty 50 Index Fund, top 50 companies in India. Investing in this fund means investing in many companies at once, but with just one click. 2. How does it work? Index fund is passive investing, meaning, here no fund manager buys and sells stocks every day. Rather, the fund is auto-updated according to a specific index. As a result, low costs, low fees, low risk diversification, good returns in the long term. You're sleeping, watching Netflix, even at parties, but your money keeps growing quietly. 3. Why choose an index fund? Most people invest in stocks selectively, but 90% of investors can't beat the returns of an index fund. Reason: the market doesn't always go up, but it does go up over time. Index funds follow that. No one will make a mistake by choosing a stock alone. Warren Buffett himself said, "Index funds are the best investment for a common man." If you think I'll trade myself and become a millionaire, then remember, even professionals admit defeat to index funds. 4. How much money can you start with? The misconception is it takes thousands of dollars to invest. Nope. In the USA, you can start with $50 or even $1 on platforms like Vanguard, Fidelity, and Schwab. In India, you can start with as little as $500 per month in SIPs like Zerodha, ROW, or Upstocks. If you start in your 20s or 30s, compounding will do more for you than your income. It's such a simple, cheap, and powerful plan. Why do people make mistakes? Let me tell you now. 5. Why don't people invest in index funds? Reasons: it's boring. Returns come slowly. It's not noticeable. But the truth is, most people go into exciting investments like just stock trading or meme coins and end up losing money later. Index funds won't make you rich overnight, but they will give you a secure life by the age of 40. If you are looking for an investment that is simple, safe, and has stood the test of time, there is nothing better than an index fund. It is a car that you sit in and reach your destination with patience and time. Choose an index fund today, start SIPs, and watch how your money grows silently. And if you want to know what else you can do between the ages of 20 and 30 to change your financial future, then watch my video 5 Ways to Improve Your Financial Life in Your 20s and 30s. The link is below. Subscribe to this channel, because here we find the path to financial freedom in the future in simple language in a practical way.